Okay, you are welcome back to the part 2 of our price action. Like I said, this is just some little touch, like a summary of what is happening, what has been explained already in the Candlestick Trading Bible. If you have read that, these things will be easy to understand. Please do well to do it. Now, candlesticks and patterns. The major way that price move in the market is through buying and selling, and the buying and selling can be represented using candlesticks. Okay, so the candlestick here, the first one represented by black is for my buy candlestick. The second one here represented by the blue color is for the sell candlestick. Okay, and we know this shadow is the wick, or this shadow wick, and then this one is the body of the candlestick. Then we have different type of candlesticks. The most important ones are just these 3 categories. Okay, these are just the most important ones that we are going to be using mostly. Every other type of candlestick formation can be found using these 3 categories. So the first one there you can see is the buying and selling candlestick. Then the other one here is called hammer candlestick, and the other one is called shooting star. And we know that hammer candlestick is mostly for what? Buying. It will occur in downtrend. It will occur in downtrend, and then or in pullback we can use it to trade. Then the other one is shooting star. It mostly occur in uptrend. For trend reversal we can use it to do what? To also trade. And these other ones are just smaller body of this buy and sell candlesticks for easy understanding. Then the most important candlestick chart pattern we'll be using all the formations. Okay, the first one is evening star candlestick, and the evening star candlestick is mostly used for what? Downtrend. All right, meaning that when price is making series of pullback, we know that this is a downtrend, right? Then maybe at this point, at this up here, this evening star candlestick pattern can form at that point. Then all we want is what? For price to go back to this candlestick pattern and continue to sell. Okay, so this evening star candlestick pattern is just for continuation of what the trend is already doing. Since the trend will be selling, evening star candlestick, when it appears, is going to continue selling when price tap into it. And we need to take note of something. There are 3 candlesticks that form the evening star candlestick. The first one, the buying candlestick. Number 2 is also buying candlestick, but the body is smaller than the first candlestick. Okay, then the third one is now what? The selling candlestick. That is number 3, which is also bigger than the number 2 candlestick. So there are 3 candlesticks that make up the evening star candlestick pattern. Hope that is very clear. And how do you distinguish it from a lot of candlesticks that you are going to see in the market? Is this the first thing first is the wick of the number 1 candlestick. Number 2 candlestick, the wick is going to be higher, much higher than the number 1 candlestick wick. You can see what I'm trying to do here. This is the wick of the number 1 candlestick. Yes. Then the wick of number 2 candlestick, you can see that it is much more higher than the number 1 candlestick wick. With that, we can say this is what? This is an evening star candlestick pattern. Then the number 3 candlestick, the wick is going to be below the wick of number 2 candlestick. Hope you can see it. The wick of number 1 and number 3 candlestick, they are going to be below the wick of number 2 candlestick. With this, we can say this is now what? An evening star candlestick, and it usually happen, in an uptrend whereby price is going to continue in a downtrend. It's for reversal. Then that's the way to draw it correctly. Then if you see that there are some time that you see this type of pattern formation in the market, this is not evening star candlestick pattern, whereby you see the first candlestick, the wick, you can see the wick is much more higher than the middle candlestick. And then we see that number 3 candlestick also, the wick is probably the same height with the middle candlestick wick, and that is not supposed to be so. This is the right formation to draw it, like I've explained 1, 2, and 3, where the number 2, which is the window candlestick wick, is much higher than the number 1 and number 2. But in this scenario, you can see that the number 1 candlestick wick is much more higher than the number 2 and number 3. This is not a valid morning star candlestick pattern. Sorry, this is not a valid evening star candlestick pattern. Talking about the evening star candlestick pattern, let me show you an example. So on the chart, this is an example of the evening star candlestick pattern. You can see it. Hope you can see it. It's very easy to spot on the market. Let me zoom in. This is how it formed on the chart. You see, it will form a different pattern, but our theory remains that the first candlestick and the second candlestick and the third candlestick, this is a reversal what a signal. You know, this market is bullish, whereby making higher high, higher low. Then price formed a what? A bullish, a bearish pattern, which is called an evening star candlestick pattern, where we have the first one here. The first candlestick, you can see the wick of the candlestick of the first one. You can see the wick of the candlestick of the second, of the third one. Then we can see the wick of the candlestick of the number 2. You take out the number 1 candlestick wick, then the wick of number 3 candlestick is very low compared to the wick of the middle candlestick. So this is going to be what? Our evening star candlestick pattern. That is an example of that. Now, coming to the morning star candlestick pattern, it is usually formed, in a downtrend, whereby on our one price will be what in an uptrend, and it's just like an invert version of the evening star candlestick pattern, whereby this is the first candlestick, number 2 candlestick, number 3 candlestick, and we want the number 2 candlestick also the wick to be much more higher than the wick of number 1 candlestick and the wick of number 3 candlestick. Okay, so with this, we now have our morning star candlestick pattern. It usually forms in a downtrend to cause an uptrend in this case. Now, how to get it correctly also, when this type of pattern formation also formed, this is not a morning star candlestick pattern. How will you know it? When the number 1 candlestick wick is much more lower than the number 2 candlestick wick and number 3 candlestick wick. This is not a morning star candlestick pattern. Do not make use of such pattern. So an example of the morning star candlestick pattern also is going to be found on the chart. Let me show an example. So this is the morning star candlestick pattern. You can see that on the chart. Price is making bearish move, taking out the low point. Then after price has taken out the low point, a morning star candlestick pattern is for reversal. And what the price do here, after price has making this pullback, price gave us a number 1 candlestick, number 2 candlestick, and number 3 candlestick. Okay, you can see that the wick of number 1 candlestick is very low. The number 2 candlestick wick, take out the wick of number 1 candlestick, then the wick of number 3 candlestick is below, is now above the wick of number 2 candlestick, meaning that number 2 candlestick wick is the longest. You can see that this is the longest wick, taking out number 1 candlestick wick, then number 3 candlestick wick is just like that. The lowest point, the lowest wick here is the number 2 candlestick wick. Number 1 candlestick, number 2 candlestick. All that is very clear. You can see our price, tap into it and then continue in the opposite direction, because direction of the market here is just downward, taking out lower low, taking out lower high. When price has already formed this morning star candlestick pattern, you can see what price is just doing. Price then reverse and continue to go in the opposite direction. Okay, this is how you know that this is a morning star candlestick pattern. Price was in a downtrend, then price changed to an uptrend. Okay, then to finalize the candlestick pattern, these are the most important 3 categories after the morning star and evening star candlestick pattern. These other 3, they are very important also to take note of, because these are the candlestick we are going to be using for all of our trade entries and all of those. The first one is bullish and bearish engulfing pattern, and How do we know this is a bullish candlestick? Whereby the number one candlestick is very small, and then the following candlestick is more than, or let's say times 2 of the previous candlestick. Okay, this is number one candlestick. You can see the body and the wick very small. Then the number 2 candlestick, the body and the wick, if you check it out, there is like times 2 of the number one candlestick body and wick. This is going to happen in a downtrend, whereby we want price to continue to make a reversal to the uptrend. That is why it is called bullish candlestick, engulfing candlestick. Then for bearish, the first candlestick is very small, then its following candlestick is more than, or let's say times 2 of the previous candlestick. It's going to be called bearish engulfing candlesticks. This is how it occurs in uptrend and downtrend situation. Now let's go to the other one. The other one, you can see there's a difference. The first candlestick will be very big, then the following candlestick will be very small. That's the number 2 candlestick will be it's like half of the number 1 candlestick. That is how you identify this is a bullish what? Arami. It's just like when somebody is pregnant. You can see that the mother, the person carrying the pregnancy is very big, while the tummy where the pregnancy is very small. So you can use such scenario whereby this is a pregnant somebody with a protruding in your stomach. Then that is for bullish Arami. That is the meaning of Arami. When it comes to bearish Arami, it happens in an uptrend to cause a downtrend. So this number 1 candlestick is going to be very big. Then the following candlestick is going to be like half of the previous candlestick. It's just the opposite of the engulfing candlestick, whereby number 2 candlestick is times 2 of number 1. Number 2 candlestick is times 2 of number 1. Okay, but when it comes to bullish Arami and bearish Arami, number 2 candlestick is half of number 1. Number 2 candlestick is half of number 1 candlestick. Then lastly, the last one is inside bar false breakout. Okay, so the number 1, it involves 3 candlestick, and the number 1 there is the bigger candlestick, just like the mother candlestick. Then the number 2 is like the child candlestick, just like when we are talking about bullish Arami, where this is like a pregnant woman with protruding stomach. Then the number 3 candlestick will be like a fake out, whereby price is trying to say, okay, this is supposed to be a bullish trend, but I want to invalidate this Arami pattern, candlestick pattern. If price want to invalidate it, it will now give us number 3 candlestick, and this candlestick is called what? An hammer. What an hammer does is to reverse, to tell us that price is going to buy. And people will think that because this Arami low point has been broken with this candlestick, so therefore the price will continue to sell. But price is not going to continue to sell, it's going to continue to buy, because an hammer candlestick pattern has been formed as the number 3 candlestick, whereby the low point of 1 and 2 is now taken out with this number 3 wick. Okay, that is how we know that this is now what? An inside bar. This is the inside bar. Okay, an inside bar false breakout, because the breakout that is supposed to happen, if this candlestick close below the number 1 and number 2 candlestick, that is not a bullish inside bar false breakout. But because it finally gave us wick, and this is an hammer candlestick pattern, meaning that this is going to be bullish engulfing. This is going to be bullish inside bar false breakout. The same thing goes for the bearish inside bar false breakout, where we have number 1 and number 2, just like the bearish Arami. Then price is trying to invalidate it by giving us a shooting star candlestick. Number 3 candlestick will now be a shooting star, where the wick of the shooting star take out the wick, the high point of number 1 candlestick, and number 2 candlestick. With this, we know that this is a bearish inside bar force breakout. Okay, so I hope this is very understanding, and all these things is just a little summary of all the information that is already in the candlestick trading bible. I just wanted to get familiarized with it. You don't have to understand everything. These are just important candlestick formation we are going to use in all of our trading. I hope this is very helpful to you. Watch it over and over again, understand it, and we'll move on to the next one.